This video reviews Mitsui Fudosan's second quarter financial results for fiscal year 2025, covering the period from April to September 2025. Mitsui Fudosan is one of Japan's largest and most influential real estate companies. Founded in 1941, it is part of the Mitsui Group and is known for major urban projects such as Tokyo Midtown and the Nihonbashi redevelopment. In the first half, Mitsui Fudosan achieved record highs for operating revenue and all levels of profit down to net profit. Reflecting these strong results and favorable short-term conditions, Mitsui Fudosan has revised its full-year forecasts upward. Along with this revision, Mitsui Fudosan has raised its annual dividend guidance by 1 yen per share and decided to carry out a share buyback totaling 57 billion yen as part of its shareholder return policy for fiscal 2025. This will bring the total expected payout ratio for the fiscal year to 56.6%. Regarding share repurchases, Mitsui Fudosan will acquire a total of 100 billion yen worth of shares during this fiscal year, combining the new 57 billion yen buyback and the remaining unexecuted 43 billion yen from the 45 billion yen program approved in February 2025 for fiscal 2024. As a result, Mitsui Fudosan's 2-year compound annual growth rate for EPS, covering both fiscal 2024 and fiscal 2025, will increase to approximately 10.3%, and the projected return on equity, ROE, for this fiscal year has been revised upward to the mid-8% range, compared with the initial forecast in the low 8% range. In addition, Mitsui Fudosan has made solid progress in reducing its strategic equity holdings. The cumulative reduction from the beginning of the previous fiscal year to the end of this fiscal year's second quarter is just under 40%. Revenue and profits hit all-time highs, with increasing dividends and additional share repurchases. Mitsui Fudosan's performance continues to be excellent. In the first half, Mitsui Fudosan achieved year-on-year growth in revenue and profits for all key indicators, including operating revenue, operating income, business income, ordinary income, and net profit, marking new first-half record highs for each. Revenue was 1,353.4 billion yen, up 16.4% year-on-year. Business income, which is the combination of operating income and gains and losses on equity method investments and the disposal of fixed assets, was 246.4 billion yen, up 42.3% year-on-year. Net profit was 152.1 billion yen, up significantly 72.3%. Progress rate against the net profit annual forecast is 57.4%. Mitsui Fudosan is making steady progress toward achieving full-year forecasts. Results by each segment in the first half. Leasing segment leases office buildings and retail facilities in Japan and overseas, focuses on modern high-spec offices to boost tenant engagement, and branded shopping centers like Lalaport and Mitsui Outlet Park, maintaining low vacancy rates. In the leasing segment, operating revenue for the first half increased by 8.7%, and business income rose by 3.4%. Revenue and profits rose overall, mainly due to strong performance in the office business, supported by domestic and overseas properties, such as Tokyo Midtown Yasu and 50 Hudson Yards in New York. The office vacancy rate was 0.9% as of the end of September. This low level reflects steady tenant move-ins and marks the lowest vacancy rate since 2007. Mitsui Fudosan had initially expected the year-end vacancy rate to be around 2%, but now forecasts it will improve to the mid-1% range by the end of the fiscal year. Property sales segment sells residential and commercial properties to individuals and investors, offers high-quality condos and houses domestically, develops international properties, and sells offices, retail, and logistics facilities, driving revenue through large-scale and overseas projects. In the property sales segment, operating revenue for the first half increased by 49% and business income was up by a significant 97%. For property sales to domestic individuals, both operating revenue and operating income showed strong year-on-year growth due to progress in handovers for large-scale properties such as Mita Garden Hills and Park City Takadanobaba. The contract rate for domestic condominiums at the end of September reached 96% of the total projected 2,800 units for the fiscal year, indicating very strong demand. Although the number of reported units, including condominiums and detached houses, decreased year-on-year, The average unit price remained very high at over 170 million yen, showing that selling conditions continue to be solid. At the end of the first half, inventory was very low, with only a small number of condominiums and detached houses remaining. In property sales to investors and overseas individuals, revenue and income increased significantly year-on-year, supported by sales of major properties including the Otemachi Building Nagoya Station Front and 2 Mitsui Fudosan Logistics Parks properties. Management segment provides property management, tenant services, and brokerage under Mitsui Rehouse, Japan's top residential brokerage. Offers asset management for institutional clients, ensuring optimal property performance and tenant satisfaction. In the management segment, operating revenue for the first half increased by 4.9% and business income increased by 12.5%. In the property management subsegment, both revenue and income rose from the previous year, driven by higher usage in the car-sharing business and increased parking fees in the Repark car park leasing business. In the brokerage and asset management subsegment, revenue and income also grew, mainly supported by higher project management fees. Facility operations segment operates hotels, resorts, and sports entertainment facilities, including Mitsui Garden Hotels and Halekulani, Hawaii. Manages stadiums and arenas like Tokyo Dome City, creating vibrant spaces for visitors and communities. In the facility operations segment, operating revenue for the first half rose by 9.3% and business income increased by 20%. The gains were mainly driven by higher average daily room rates and occupancy levels in the hotels and resorts business, as well as increased usage fees at Tokyo Dome. Within the subsegments, the hotels and resorts business and the sports and entertainment business, including Tokyo Dome City, both saw solid revenue growth compared with the previous year. Overseas business. For the overseas business, combined business income for the first half decreased by 3.5%. These figures reflect the results from January to June 2025, as there is a 3-month reporting lag for overseas operations. In the overseas leasing business, revenue and profits rose, mainly due to higher office revenues and profits from properties such as 50 Hudson Yards in New York City. In the property sales segment, although progress was made on property sales, the company recorded losses on the sale of rental residential properties on the U.S. West Coast during the second quarter. As a result, while revenue rose year-on-year, profits declined. The combined management and other segments reported a small revenue increase and a slight rise in profits compared with the previous year. The leading real estate developer Mitsui Fudosan sees its overseas business playing an important role in driving profits. Mitsui Fudosan has revised its full-year forecasts to reflect stronger-than-expected performance in the management segment. The Rehouse retail brokerage business showed solid results, and profitability improved in the Repark car park leasing business. As a result, segment business income is now expected to exceed the initial forecast. Overall, the company has raised its full-year operating income forecast to 385 billion yen and business income forecast to 430 billion yen. After accounting for higher corporate taxes due to increased profits and the impact of net profits attributable to non-controlling interests in the second quarter related to impairment losses, the full-year net profit has been revised up by 5 billion yen to 265 billion yen. Reflecting these stronger results, Mitsui Fudosan has increased its annual dividend guidance by 1 yen per share and plans to implement a share buyback totaling 57 billion yen. As a result, Mitsui Fudosan expects to achieve new record highs for the full year in operating revenue, operating income, business income, and net income. These projections represent the 14th consecutive year of record highs for operating revenue and the 4th consecutive year for operating income, business income, and net profit. Stock price. This chart over the past year shows the stock price in Japanese yen at 1,641 as of November 7. This chart shows the stock price in US dollars at 32.16 of November 7. There was no significant stock price movement even after the earnings announcement this time. Mitsui Fudosan achieved record high profits, but the results were generally in line with market expectations. Current PBR is 1.41 and PER is 17.2. Dividend yield is 2.7%. Compared with historical PBR, PER, and dividend yield, the stock price appears high, reflecting both the company's strong past performance and expectations for further growth. Conclusion: first half results were outstanding, achieving record highs in revenue and all profit measures. Growth was driven by solid performance across all segments. Mitsui Fudosan has revised full-year forecasts upward, increased dividends, and announced additional share buybacks, signaling continued financial strength and shareholder returns. Interest rate hike by the Bank of Japan is expected soon, which could be a negative factor for the real estate industry, but a sharp increase is unlikely, so a major impact is not anticipated soon. This fiscal year, Mitsui Fudosan is on track to set another new full-year records for revenue and profits, continuing a multi-year trend of growth.